Good morning and welcome to the third week of Illinois Soybean Association's Agribusiness Management Summer Webinar Series. I'm Jessie Shootman, Field Staff Accountant for Illinois Farm Business Farm Management and one of the AMP advisors for ISA. AMP is a new program for ISA. It's an educational resource for farmers and agribusiness professionals to hear the latest agribusiness advice and guidance. This summer, we are offering the AMP webinar series as a free 5-week program where experts will present on agribusiness topics, including succession planning, grain marketing, and more. Today, we have 2 presentations for you. First, Todd Hubbs will share a corn and soybean outlook. And later this morning at 10 a.m., Paul Stoddard will present a webinar, 21 Things I Wish Someone Had Told Me When I Was 21. But before we get started, we wanted to review a few housekeeping items to help make the best of this virtual experience. You can ask questions of the presenters, our ISA webinar staff, utilizing the GoToWebinar dashboard in the right-hand side of your screen. If you're having audio or technical issues, please alert the staff through that dashboard as well. For any CCAs in the audience, if you stay with us for our 9 a.m. session with Todd Hubbs, you will earn 1 CEU in professional development. We will have the details at the end of our webinar on how you can access your credit. Before we introduce today's speakers, I'd like to give today's sponsor, Farmer Mac, time to share a few comments. Jackson, go ahead.
Well, thank you, Jessie, and good morning, everyone. You know, in volatile times like these, we in the ag sector are all thankful to have great partners like Illinois Soybean Association, thought leaders like the university, professors and staff you'll hear from today, and of course, capital supporters like Farmer Mac. Farmer Mac, I'm a chief economist over at Farmer Mac. We're a secondary market for agricultural real estate, USDA guaranteed, and rural infrastructure lending. And for over 30 years, we've worked with rural lenders to provide greater financing options and ultimately a lower cost of capital to farmers, ranchers, and rural Americans in all 50 states, including many right there in Illinois. Farmer Mac has worked with over 1,500 institutions to help finance more than 75,000 farmers and ranchers and fund over $58 billion in rural capital since founding in the 1980s. We've reduced cost, interest rate risk across the country, and those are kind of things that are even more important when you have incomes under pressure from lower commodity prices. You need to squeeze every nickel out of that expense line and reduce every element of risk that you can. We also put out a quarterly Ag Econ Outlook. It's free for everyone. You can just go to our website, www.farmermac.com. It's called The Feed. You can subscribe to it completely free, and we welcome lots of good feedback and thoughts from that publication as well. With that, I'll turn it back over to you, get you guys back to that fantastic content that you've got laid out in front of you for the day. Stay safe and have a great day, everyone.
Thank you, Jackson, for those comments. Farmer Mac's support of this program, along with our other partners, is invaluable to its success. And now, without further delay, I'd like to introduce our speaker today, Todd Hubbs. Todd is an agricultural economist with the Univeristy of Illinois, and his work focuses on commodity price outlook, risk management, and price forecasting of agricultural sector variables. Todd holds a PhD in agricultural economics from Purdue University. Todd, you can take it from here.
Thank you, Jessie. Good morning, everyone. Today I'm going to run through a corn and soybean outlook, give an idea where I see the fundamentals headed, and maybe a little bit of marketing strategies at the end of each one. Just as a preface to this presentation, as we all know, there's just a load of uncertainties out there right now surrounding the coronavirus, the elections, and our relationships with China and trade deals in general. And I'll talk about them as I go through the presentation, but these kind of uncertainties are almost impossible to forecast, particularly the growth we might see coming out of this COVID-19 problem. Any economist that tells you they do know what's going to happen is flat out lying to you. Let's get started here. There we go. So what you're seeing here is the WASI tables for support soybean, the balance sheet basically that the World Agriculture Outlook Board puts out. I highlight here the ending stocks numbers for beans. The left, when you look at the right 2 columns, that's the estimate for this marketing year. in the 1920, and then the July forecast for 2021. And ending stocks look like they're headed in the right direction after the huge number we saw in 1819. I would like to talk about the total use category, and I'll get to this more a little bit later, but basically USD is projecting us to use about 500 million more bushels of soybeans in the 2021 marketing year, and it's intimately tied to that 400 million bushels of extra soybean exports. And going back to the uncertainty I was talking about earlier, I'm worried about that number. I hope we can hit it. I hope we can exceed it, but we'll see how it all turns out. And here we go. So I'll talk about production a little bit. Us and two of our major competitors in soybeans in particular, we basically set aside about 12 million acres of soybeans last year, and we've come back a little bit this year. Brazil had a massive crop once again, and they're projected, both them and Argentina, and when you look at Uruguay and Paraguay, it looks like they're going to be up about 7 to 8% in production for the 2021 marketing year. By all accounts, Brazil's farmers have had a couple of great years. I don't expect them to send a gift basket or anything due to our policies, but they are having a lot of success. Argentina has all kinds of political troubles. We can be thankful for that. And, you know, there's a potential for a locust swarm there that maybe didn't turn into anything. This has been one heck of a year, I have to say. It's biblical in proportions. Right now, I think these forecasts are probably pretty good. Expanded acreage and yield potential in Brazil and in Argentina for soybeans. So the competition is going to be stiff as we get into 2021 for sure. Look at the demand side a little bit. We've had an excellent year for crush. USDA raised the 1920 crush by 15 million bushels to 2.155 billion. And they've got 2021 at 2.16 billion. We definitely have the potential to crush that many beans. We've seen expanded crush potential over the last few years. I think the question for me is, will we hit that crush number? I'll be hopeful. Some concerns. We have seen soybean oil prices rally over the into last week and into this week above 30 cents a pound on some issues with palm oil production. That's a good sign because soybean oil prices were pretty poor, and they look like there'd be a plentiful supply of vegetable oils in the world. While that's important, the soybean meal is what's keeping me awake at night. You know, we do see a huge livestock herd out there. I don't see it growing much between 1920 and 2021. With everything going on with the coronavirus and all the restaurants shut down, we're seeing these shifts in supply chain in the livestock sector. I feel like we're in a place where we could see moderate meat demand, where there's people dying at home more, that could go all the way through the 2021 marketing year, and it gets back to export numbers. I expect China to import quite a bit of pork and beef this year, but that gets back to the trade relations and the issues going on there, and I'll talk about that a little bit more later. I'm optimistic for the crush number. We do have the potential to hit it. It's just, where's the growth going to come from in 2021 marketing year? Exports, this is the key, and as you can see, I don't have the 1920 by our main export markets in here. We haven't finished the year yet, but that 1650 that USDA is projecting for this marketing year, that's probably about what it's going to be. It could go up or go down a little bit depending on what export sales end up doing. The sales we've already got, will they tip over into the 2021 marketing year, or will we get them delivered this year? That's pretty close, and they've been lowering that pretty consistently through the year. Brazil absolutely exported a load of beans, and I'll talk about that a little bit later. Right now, USDA has got us at 2.05 billion bushels of exports, and we have seen strong buying out of China for the 2021 marketing year. And they've been going at a pretty good pace. About every day you see another export sales report come through. I think we're around 360 million bushels sold thus far. but that's a far cry from tipping over into 1.2 billion bushels. I'm not sure China is going to go back to the peak we saw in 16-17 marketing year. I see them more at a little over 1 billion bushels from us. I hope it's more. Mexico and Japan are relatively consistent. We've seen some growth from there recently, and some other places. We've seen some growth as well, but they're all small players compared to China. It's very hard to replace them in the world market. I do think they are rebuilding their hog herd, and there's a potential for them to buy more from us than I currently believe. When we look at their import numbers, USDA's got it basically forecasted flat at a little over 3.5 billion bushels between marketing years. Now, they are rebuilding their hog herd. They're nowhere close to back to where they were before ASF set in. And they're a little bit close. I think they're probably about 20% below on their sow herd. It's hard to say because it's hard to believe the data that comes out of China. It's a little bit fuzzy and they're difficult to get a handle on a lot of times. From what I've seen and talking to people, their crush margins are pretty good. We've seen them bringing in a bunch of imports, and they have had restrictions on some meat imports due to coronavirus and other things. And I don't know if they can make that stick to meet their protein needs moving forward. They're definitely going to need to import some pork. I think they're going to import a lot of beans. The question is how many will be from us. They have had flooding as well. So I'm optimistic we can get over 1 billion bushels to China, but we'll see how it turns out. Just to give you an idea of the kind of export numbers Brazil's been doing, and the green bar is what they've done in 1920 so far, and everything you see from March onward are record exports from Brazil, with a good chunk of that going to China. They've been over 500 million bushels a month, and sadly, you can see us sort of below what would be our normal 5-year average till we got to April. And some of that's from Chinese buying from us as well. So Brazil's taken real advantage of our trade problems with China and their currency issues. Now the real has strengthened against the dollar a little bit over the last few weeks, but it's still down almost 30% from where it was at the start of the year. At these peak times you see, March, April, the real was very, very weak, and into May. And we have seen some strengthening lately. I doubt it'll strengthen too much more as we move through the year. They have coronavirus issues as well. And because of that, their farmers have had a really good year for soybeans, a good crop, strong exports, good prices. That goes for both soybeans and corn in general. So Brazil's really starting to eat market share from us in a serious way. And I don't see that changing if they have a decent crop next year. There is a seasonality to our exports, as you can see. We typically do most of our business in the fall and through February till Brazil comes on. Over the last few years, though, Brazil's been exporting more in the fall as China's bought from them as well as us. And that's ate into our market share significantly. So when we think of overall demand picture, right now we're at about a 16% stocks to use ratio for the 1920 marketing year. We could see crush go up a little more or exports go up a little more, but this is about where it's going to be. Right at this point, USDA is projecting about a 9.8% stocks to use, but prices down a little bit. And it's really going to come back to supply, I think, if we're going to see any price strength in the near term, for sure. And so let's talk about acres for a little bit. You know, over the last 5 or 6 years, we've seen principal crops, CRP, and prevent plant acreage somewhere in the 344 to 346 range. This year, we saw a real shock in the June acreage report where corn acreage came in about 5 million acres below where a lot of people thought. And our principal crop acreage is down to about 312 million acres. CRP is about 21.9. You know, when we got into June there, I think there was a lot more prevent plant done out west and maybe some here out east too, potentially on corn. And we saw that rally in early June in soybeans, and I'm not so sure that rally didn't buy a few soybean acres, not a lot, but some, as we saw the prices get a little bit stronger in soybeans in June. So overall, when we think about the corn soybean acreage bundle. We're at what is it looking like? Maybe a little more acres in soybeans before it's all said and done, and a little less in corn. And this prevent plant number could be a little bit higher than 7.5, but that's where I think it's about at right now. So when we look at soybean planted area, we're at, in June acreage report, 83.8 million acres. That's up 7.7 million from the huge set aside in 2019. Almost every major productive state went up in acreage, which made a lot of sense. You think about what happened in 2019. I think you might see a few more acres out there, as I said, but this might be pretty close. We could be upwards of 84 million acres when it's all said and done, but nothing huge, I don't believe, at this point. I could be wrong on that. It could go higher, but I think this is where we're at. And overall, we're looking at maybe harvesting about 83 million acres of soybeans. They were only up about 315,000 acres from March intentions in the June acreage report. So 83 million to 83.1 million acres of soybeans, maybe a little bit higher, but pretty close to that, I think is correct. We look at soybean yield. Soybean yield right now, USDA has it at 49.8 bushels per acre. We saw a little bit of weather premium come in the market after the acreage report, where there were some hopes of, well, not hopes, but ideas of hot, dry weather through July and into early August. And that's faded as July has gone on. Weather forecasting is a tough job, but I have never seen the weather change so much in the forecast as I have this summer. I watch it religiously, and it seems like every day temperature and precipitation levels are moving around all over the Corn Belt. The last few weeks, there were projections for 90-degree plus weather, and into early August, that's all faded away. And we've had a lot of precipitation in some key growing areas all through the Corn Belt. I'm at about a 50 bushel per acre estimate right now for soybeans, but I wouldn't be surprised if it came in above that if weather continues the way it is. I think the crop's going to be in pretty good shape. There have been some issues in western Iowa, parts of Iowa and Indiana, and maybe up in the Dakotas, but these are isolated areas, and I think for the most part, soybean crop's looking in pretty good shape. So when we get to the actual projections, I'm basically where USDA is at. These are the first two columns you see for 1920. You may see crush creep up a little bit, but not much. Exports might go up a little bit. In July, USDA adjusted the seed and residual and lowered that significantly, which pushed ending stocks to over 600 million bushels. When we get into 2021, as I said, I'm at a 50 right now. On the supply side, and I think you're starting to see this creep into the market a bit, there's a potential for a few more acres and a very good yield that could be well above what USDA is currently projecting. So I'm at a little bit above USDA on supply. That could go up before it's all said and done. Excuse me. For crush, I'm a little bit below USDA for the reasons I talked about under the crush thing, under the crush slide. And for exports, I'm at about 100 million bushels below USDA. I hope I'm wrong about that. I would love to be really wrong about that. There's just a lot of uncertainty right now. Basically, in my opinion, based on the economic growth we've seen and all the issues with China that keep cropping up, both geopolitically and with trade deals, I feel like USDA's use estimates for 2021 are more at the high end of potential rather than in the middle. And I think everybody should sort of keep that in mind. They could be right, they could be low, but based on all the uncertainty with the economy in general and the world economy in general, it feels like they're incorporating a strong phase one trade buying, which China's got off to a good start, and an economic recovery that looks a little bit stronger than from where we're sitting right now to me. Nonetheless, I'm at about 550 million bushels of carry out and about an 845 average farm price in the US. Now here in Illinois, that would probably be an 860 to 865 cash price for beans here in most of Illinois, particularly in central Illinois, and getting down the south a little bit higher, getting up the north a little bit lower. But we're talking 860 to 870 bean prices under these kind of use and supply assumptions. Now let's think about this a little bit. Here's a little bracket I make to think about crop expectations and marketing. And I think we've seen basis sort of stabilize on old crop. So when we're talking about old crop, I don't see basis weakening very much or strengthening very much at this point. The futures have been running down, and I think they might continue to do so. So, you know, if you think you're in a place where you've still got beans, you may be in a cash selling position at this point, this far into the marketing year. If you're looking out into moving into the 2021 marketing year with your storage, I would seriously think about it. When we saw the November bean prices bust $9 in July, that was a sell signal, in my opinion. I don't know if we'll touch that again. With the acreage report being a little bit more bullish than people thought, and the weather premium that entered the soybean market, while we have seen, and we saw strong buying from China, all that coalesced to push new crop beans in November up above 9, and they've deteriorated significantly since then. I sort of see new crop cash prices sideways to weaker as we get in the near term. If we see China start buying in a big way in the fall and the crop doesn't turn out to be as big as it's looking like right now, I think we're looking at basis basically flat here in central Illinois. You're seeing it minus 25 and minus 30, depending on where you're at, that may be different. Basis basically stable. If the crop starts to build and get bigger, and we'll find out more in the August production report, you could see basis weakening and futures down. So I would think very hard about, if you're thinking about marketing new crop, where we're at these days. If we see another rally on buying out of China, and if it's a significant rally, and maybe the crop doesn't come out as big, you may want to think about hedging across the August crop production report. And I would take that in consideration. We can discuss it more in questions, but I'm sort of down in this part of the bracket these days, futures down, basis flat, or you may want to go HTAs or think about moving out into January. And there's some decent prices out there. When you get into the futures contract and the forward curve on soybeans, March and on, it's basically flat. I think the expectations on a large Brazilian crop are strong. All right, let's talk about corn a little bit. I'm highlighting the ethanol number. You know, with the coronavirus lockdowns, we saw ethanol production plummet. Much like in beans, USDA is assuming about a very large jump in use this year. They're at a $3.35 price, seasonal average price, and about 1 billion bushels more of use. Now, the lower price can spur demand like that. I'm just curious where it's all going to come from based on the economic problems we're seeing. I'll talk about these more in detail. That 92 million acres was a relief. If we'd have planted 97 million acres, we'd have all been struggling to touch $3 corn. Now we're not in that position, but it's not like it's roses and sunshine out there with corn prices. We look at production, we're slated for about a 15 billion bushel crop this year. It could come down a little bit, but I doubt it. We may see slightly less acreage, and I'll talk about that later. Brazil had a good safrinha crop, but not as good as they were expecting based on the expanded acreage. They've also got very strong domestic corn prices because last year from June through basically December, they exported a lot of corn and ate our market share through the fall, which is why you saw our exports numbers so low. And they've got significant livestock herds there. I'm exporting proteins to China as well. I think maybe they'll export more in safrinha as we move into the fall, but it's not going to look anything like next year because they have strong domestic prices. Ukraine, I think we might see them come in a little bit. Particularly, we've been seeing China doing some big buys in corn, which is great. I think Ukraine will also be sourcing China this fall and be a competitor in that space. We think about demand in general. We did not see the feed use in the third quarter that most people expected with the lower ethanol production and much lower distillers grains out there. I think the supply chain backup saw a lot of hogs on sustainability rations, cattle out the pasture. We just didn't see it. It's looking like that feed and residual number for this marketing year, 5.6 billion bushels, is close. We have seen the slaughter facilities open up and a lot of throughput and meat production over the last few weeks to where we're back to where we were last year and slightly above in some weeks. And we're starting to see the hogs and cattle move through the system. Hopefully here in the fourth quarter, we'll see a little bit stronger feed and residual use than we normally do. But I think that 5.6 billion is probably about right, if not a little high. Next year, we've got it set at 5.85 billion bushels. And all the issues I talked about with soybean crush are the same in my mind with U.S. corn feed use. It does feel like we'll have a decent herd, but will it be higher than this year? I'm not sure it will be. We do see a lot of hogs coming in the supply chain right now, but when we get into the fourth quarter of this year and the first quarter of next year, we'll see what kind of production numbers we see in hogs and in cattle. We got a cattle on feed report coming out at the end of this week, and it'll be interesting to see where we're at. It looks like we're well up and the pipeline's moving again. The livestock prices aren't great shakes right now, and I wonder what kind of production numbers we'll see when we get deeper in the 2021 marketing year for the herd. I'm going to talk about ethanol a little bit of detail because it's key. It's about 40% of our use, and it's taken a big hit this year. 4.85 billion bushels of use for corn use for ethanol is sort of close, I think, if we see the kind of production we've seen recently continue over the near term for the rest of the marketing year. That 5.2 billion bushels that USDA is projecting is about 3% lower than what we typically see. When you think about what kind of ethanol uses do we got, about 5.375 billion bushels, I think, is a placeholder for gas consumption and decent exports in a marketing year. If we have stronger exports, it'll go higher. If we have stronger gas use, it'll go a little bit higher. But I think it's sort of the median. Right now, we're still about 10 to 11% below normal gas consumption and ethanol production. And I don't see that picking up in the near term. So let me talk about that a little bit. We're seeing weekly gas demand. After we sort of came out of the lockdown and started opening up, it really took off. But in the last couple of weeks, it's sort of flatlined as the COVID-19 issues in the South and West have picked up tremendously. I think you're seeing people stay away from restaurants and not moving around as much. And some of those states are huge gas users: Texas, California, Florida, massive populations. I think this is probably going to stay sideways for a while. We'll get a report here in a few minutes from EIA on last week's gasoline demand. I would like to see it pick up a little more. I'm just not sure it's going to. And basically, ethanol production will follow this with a little bit of a lag. When we look at weekly ethanol production, it plummeted as we locked down on gas consumption. We saw that crazy negative oil price incident in April. We're starting to see gas stocks come down. We saw ethanol stocks come back down to reasonable levels and production around 930,000 barrels a day. It's still well below what we would normally do in this peak kind of driving season. I would like to see this carry on and get upwards of 980,000 to 1 million barrels a day. And that would definitely make us hit that 48.50 for this marketing year. Even if they don't, if we can stay around this level, it'd only be 10 to 15 million bushels. Now, I get this question a lot. The industrial ethanol uses have picked up. We've seen exports of ethanol that's not for gas and fuel consumption. I guess hand sanitizers and things like that have taken off. But we're talking the difference between 8, 9 million more bushels of corn versus the 150 million bushels we lost for fuel use. So while there is a positive there in the industrial uses, they're not going to make up for this problem. I think if we see a resurgence in the fall that's really strong, I hope we don't go back into a lockdown position, but it's very feasible we could, or at least people would stay home, not move around, and use a lot less gas than we would normally see. It puts that 5.2 billion bushels in question. I think we'll hit it. I'm optimistic we won't see the kind of troubles we saw in April and May. We'll have to see how that all turns out. The thing about exports in the marketing year, this will be the third straight year, and these are estimates through May. I'm sorry, that's a little blocked out in their tagline there. We've seen Brazil go down year over year, and once again, they'll be down again. Through May, we're about 51 million gallons behind last year's pace. India has been a growing market for us, and I just think with their lockdown and all the issues, they're probably not going to eclipse what they did last year. I talk to Brazilians quite a bit. They're nice people. I like their farmers, just like I like our farmers. But they have copied us pillar to post. They're starting to build their own corn ethanol industry. They're trying to get it to count in the exports they do to California. I hope California doesn't let them because they make corn ethanol just the same way we do. So I don't see us picking up in Brazil as much as we did back in the 16, 17 time. We'll always send some to Brazil, particularly the northern part of Brazil. I think there's markets out there for us. India is a growing market. South Korea, EU maybe will come in, particularly if they have issues with their supplies and the rapeseed and the like. But we're in a place right now where we're in a third consecutive year of falling exports, and hopefully 2021 can get us back on track. But based on the way the COVID-19 is around the world and the kind of, potential on driving around the world that we've seen, I'm not too optimistic that it'll happen. My hope is to see China come in and buy some ethanol like we saw back in 15, 16. I think it may occur. It would be great if they would do above 200 million gallons. They've been buying a lot of other ag commodities. We don't have data on ethanol. It's been sent to China, but I expect them to come in the market. The question is how much in 2021. Exports. It remains the case that Mexico, Japan, South Korea, and Colombia are always our biggest markets. We have seen China buy almost 100 million bushels of corn for the 2021 marketing year, which does put USDA's 2.15 billion bushels in place. If we could see them get up around 270, 280 million bushels, we could possibly eclipse that. As you can see, we've seen small growth in Mexico over the years. Japan's basically stable. South Korea is basically stable. Colombia is basically stable. We tend to send most of our corn in consistent amounts to our main suppliers year over year. We do get people coming in and out, and if Brazil shorts their crop a little bit, we'll see stronger exports to the rest of the world, particularly in South America and parts of Asia. Right now, I think that China buying, if we can see them continue to buy corn at the pace we've seen, it does put 2.15 billion bushels in play. And if the lower prices we're going to see, we could see demand out of Mexico and Japan and all of our major buyers spurred a little bit. So I'm optimistic. I'm not sure we'll hit that number, but I'm optimistic. And we look at the stocks to use ratio, they've been building year over year for the last 4 years. And the prices reflected that. And it's basically down here in the 330 to 350 range for the most part. We could see it go lower this year, and I expect it probably to. And what we see in cash prices right now, that is the case. So much like in beans, it's the production potential that we're trading off of right now for prices. Corn planted area, like I said, that 92 million acres was beautiful. It's still up 2.3 million acres from 2019. I think sometimes we forget that. I would not be at all surprised if we saw another 500,000 acres come out of corn, either via prevent plant or crop switching. They still had 2.4 million acres forecasted from the June acres when they did the June acres survey. People said they were going to plant. I expect most of those went into corn. But you could see some of those acreage come out. We'll find out more in the August production report. I think you can see another 500,000 to 750,000 acres come out of corn before it's all said and done. You know, that 92, if we did get around 91.5, it matters. It matters. well below March planting intentions, and we saw that huge rally out of corn after the fact. So it's really going to come down to yield. Oops, sorry guys. Right now, USDA is at 178.5. And if you guys follow our work on Farm Doc, Scott Irwin and I have been doing a lot of work on corn and soybean yield forecasting recently, and we've refined our models a bit. Just with a trend in corn, I'd be at about 177.3. But with the weather we've seen in July, I've already raised my yield expectation to about 178.5, which is where USDA is, with the potential for it to go even higher. I know here in Illinois, and I don't get around as much as I normally do because I'm trapped in my basement, as you can see. But here in the region, the corn crop, yes, there are areas, and we have seen some hail damage that came through, but the corn looks very good. Much like in beans, there's little areas out in western Iowa, some areas in the eastern corn belt that may be under pressure. But I think a lot of that corn that got planted in a timely manner is deep in pollination. It's looking pretty good. We could very easily see yield bust through USDA's current yield projection. So let's talk about 1920. We've seen strong exports lately. I would not be surprised if the 1920 export number gets in higher than 1.775 billion bushels. It depends on how much rolls over into the 2021 marketing year. But right now we're looking at carrying out about 2.25 billion bushels. It comes back to the yield right now for corn. I think 178.5 looks pretty safe. I know you hear a lot of people in the trade saying slightly below trend. Corn yields have been just excellent. Even last year we did 167.4, and that would have been at the high end of a yield possibility when I was building and forecasting yields last year. So I think there's a real potential for that yield to come in slightly higher than that. On the consumption side, I'm with them on their feed and residual. I think the herd will stay at a good level and we'll use a lot of corn. My concern basically is for exports. I could see it being 2.15 billion bushels very easily. If China buys 280, 290 million bushels of corn, we're definitely, I think, going to hit that number. Right now, I'm a little bit below them. Even with that, we're looking at a 2.77 billion carry out in my projections, about 2.64 in USDA. And I've got the price at about a 325 seasonal average price. I think there's going to be places in the Western Corn Belt that have a tough time busting $3 if this crop comes in like I think it does. Now for us here in Illinois, unlike soybeans, 325 seasonal average price will be at that, or maybe slightly lower than that. Our corn price in Illinois tends to track the seasonal average price much closer. So having said all that, old crop, I think you're going to still see just some sideways patterns in the nearby futures for a while as people try to wrap their minds around where the crop will be. I'm really worried and concerned about what that yield will be in the August crop production report. Basis in the old crops, -8 to -10 here in Central Illinois. Depending on where you're at, I think that's relatively stable. If you still got corn out there and you're looking to move it, I'm not sure basis contracts is where you need to be. I think it'll stay pretty stable as we move. I think futures prices are, like I said, sideways to slightly lower. So think about that if you're going to sell corn over the near term. New crop expectations, I think futures are basically where we're at. We could see them coming down a little bit more. We're a little above 330, much like in beans. When we got the decent corn price hit 360 in early July, that was a pricing opportunity. I thought, given the size of the crop we're probably going to put out, much like in beans, the much lower acreage and the weather issues drove it up there above 360. Now we're back down in the 330 range. Hopefully you price some of the corn in that period of time. I think we may be a little bit sideways to weaker. You may see these corn prices moving in the mid to low 320s before it's all said and done, with the basis relatively stable as we get into harvest time. So I hope I didn't go over my time. I think I'm on time, and I'm happy to take any questions if I can answer.
That's great. Thank you, Todd, for sharing those thoughts. We do have just a few questions here, and we still have time for more questions. So if anyone wants to go ahead and send those on in through the dashboard, please feel free to do so. We'll go ahead and start off with the first question. Are there any previous times to point to that can help us project demand recovery post-COVID-19?
I feel like, and I spent a lot of time thinking about this and where I think it's going to go. This is a very, very unique situation. We've never really seen this kind of downward shock in the general economy that quick, where we just shut everything down and we see economic growth just plummet, right? I don't know what it looked like when we had the Spanish flu, but we're in a different world from 1918 to 1920, right? And so really this is a unique one-off kind of scenario. It's not like the Great Recession we saw at the end of the 2000s. That was a housing bust. We saw it move through the capital markets. We had this long, slow recovery. You know, we're basically, if we can get a vaccine, which, you know, praying for that to happen, you know, if we can get a vaccine in place, and I don't think it's happening this year. I would be delighted if it happened sometime next year, an effective one. I think you'll see strong recovery, but when will it happen? That's basically where we're at. So if you're thinking about how can we project the demand recovery, you're basically asking me, when will a vaccine come out, in my opinion? And I have no idea, none. There's been promising reports. Everybody's saying there's all these treatments and everybody's competing like crazy. We're seeing a lot of innovation in the vaccine space. I personally think we're probably looking the middle of next year as a best case scenario, and I hope I'm wrong about that.
Well, we kind of hope you're wrong about that too. Okay, so another question that we have is, what cues are you looking at or focused on to say we're either in that recovery phase or that we're going to just continue as status quo?
I look at gas demand quite a bit, energy demand in general, and I track exports pretty closely. Both for corn, I look at energy demand, but I use that as a general economic barometer as well. I also look at I look at restaurant reservation placements. I look at hotel reservations. I look at a lot of short run indicators that indicate people are getting back out into the economy. And those are all very, very low and basically flat right now. And so I don't see it getting back anytime soon. I know, we're talking about opening schools and universities, and I hope it all works out, but I'm really concerned about this fall. We've got a lot of people with COVID-19. There's a huge reservoir of it running around the country. I don't think we have any idea actually how many people have it. And as it gets colder, we move inside and we start opening schools and universities, I think the idea that there's going to be a surge is pretty strong. And on top of that, if we have a seasonal flu come in, it could get really rough in this fall and winter. And I hope none of that happens. And on top of all of that, we got a presidential election, which by all accounts looks crazy right now. So uncertainty is huge. What do I track? I track these real-time short-run indicators about economic activity. And I listed a few of them. If you want, you can email me and I'll send you a link and whoever asks that question, a link and show you what I look at in real time weekly. I'm happy to do that.
Okay, we've had a couple more come in here from the audience, so I'll read those. What about the committed sales of soybeans to China, both for this marketing year through August 31st and scheduled for the marketing year 2020 through 2021? Any comments or concerns over China's ability to meet those soybean sales commitments?
So they need the beans. I don't think they're gonna, it's not that they couldn't use them. It's just them not wanting them is my concern. You know, this morning I wake up to news that we told them to get out of their Houston consulate. We have problems with them with Hong Kong, which they richly deserve. It's horrible. Issues in the South China Sea. Their position toward India and Taiwan is atrocious. Can't believe anything they say about their numbers. We got both parties blaming them for the coronavirus. And honestly, I don't care who wins this fall. I don't see China policy changing all that much, regardless of party. We're basically in a place where the entire American populace thinks they stink. And we're just in a, I think, a downward slide with them politically. And I think it's going to be tough. There's going to be a lot of tough decisions about how we deal with China moving forward. I have been on record that I thought pulling out of TPP was a huge mistake. I wish some way we could get back in it and surround them economically. That would help our ag exports tremendously. I don't know who would do that or if we even could. But am I concerned they don't meet their commitments? I think what they bought right now, they're going to take. I don't think they'll cancel very many of those. My concern is how much will they buy as we get into 2021 and the harvest season if this thing continues to deteriorate. And the worst part is, you know, it was already a trade problem that had a political, in my opinion, trade problem that had a political angle to it. Now it's like an election issue, right? So it's going to get even more visceral, for lack of a better word. So do I have concerns about them meeting their phase one trade commitments? I never thought they would meet them based on all the issues they had, but they are buying strongly. They could. If they do, that's great. I think the fact that the president said there's no phase two, basically, he's not interested in it. We're starting to levy all of these sanctions against them. Doesn't make me hopeful in the long run. It doesn't. And I mean, they buy so, I mean, they got market power in the world market for beans. They just need so many.
Okay. Well, we've got another question about the demand for China here. So is the African swine fever still a factor in the soybean demand for China?
So they had some flooding, bad flooding recently, and there were reports in some of the provinces in the south that African swine fever had popped back up. I guess basically some of the, you know, they'd buried some carcasses and all the moisture, you know, it started spreading it around. I think they're actively rebuilding their hog herd. Even without that, they're going to virgin territory and restocking it as fast as they can. I don't think by a long scotch they're out of this African swine fever issue. They've floated ideas that they've come up with a vaccine for it. I haven't seen anything. So I think it's still there. Question is, will it spread again like it did before? And if you track these things at the World Animal Health Organization, you know, we still have Vietnam, Malaysia, Philippines, Korea, Eastern Europe. They all have ASF, right? And China, it's all still there, just floating around in the wild hog herd and some of the smallholders and even some of the bigger ones. So I don't think we're out of the woods yet on it by any stretch of the imagination. Could they see another, with all this flooding, could we see another explosion in issues with it? Yeah, we could. So I'm concerned about that.
Okay, so you've given us some.
I mean, go ahead.
You've given us some things that we kind of need to be aware of. So what advice do you have to keep producers relaxed when marketing their crops in this current climate?
Oh, I think it's hard to be relaxed in this current climate. I've always said, have a marketing plan if you can build one, and it doesn't have to be complex, but you need to have targets for both old and new crop. And I like the idea of having windows. If you blow through a target, price them, right? And let it go and keep moving forward. In this time, it's a tough environment. I think the crops are going to be better maybe than what we already expect. And so that'll put some pressure on prices. It's one of those things where if we can see the demand start to build and we start to come out of this, it's an it'll be an explosion kind of event, right? A reversion. But it feels like we're going to be in this for quite a while. So actively thinking about and knowing your cost of production and what's profitable for you, having targets in place. I do think any kind of rallies these days, you can get close to a kind of profitable price. I'm not saying sell everything, but price something. Work with a marketing advisor if you're not comfortable with it. And, be active, pay attention. And I'm not saying it is stressful.
All right. Well, do you have any other final thoughts for us?
Yeah, I think keeping a level head and being realistic about the economic situation we're in is important to marketing this year. Don't get caught up in what the politicians are saying and these rallies. If a vaccine shows up at the end of this year and people actually take it and we start moving out of this thing, that'll be great, right? But experts in epidemiology and making vaccines, they don't seem too optimistic at this point that that's going to happen anytime soon. So this pressure is going to be there, probably through the 2021 marketing year. So, if you can, pay attention and be active and pull the trigger when you feel like you're in a place that you can make some money.
Okay, well, we appreciate all of those insights, and that's all the time we have for questions now. All right.
Thank you.
CCA, don't forget to claim your 1 CEU in professional development for this session. You can either scan the QR code on the screen or email our team with your CCA number by Friday to be submitted for credit. Thank you to our sponsor for this session, Farmer Mac, and thank you to our AMP partners, Illinois Farm Business Farm Management, the University of Illinois Farm Doc, and the Illinois Soybean Association Checkoff. This recording of the presentation will be posted on the Illinois Soybean Association's YouTube channel and sent to all attendees via email this week. We're now going to take a short break and reset for our 10 a.m. session with Paul Stoddard, so stay tuned. Thank you, Todd.